Welcome to The Explainer. Today we're digging into a theory about a financial shockwave so huge it could literally rewrite the global economy. It's a wild story about a catastrophic market crash, and it has a lot of people asking one really big question. Was it just an accident, or was it a deliberate attack?
So let's just start with a number at the center of all of this, $5 trillion. I mean, to put that into perspective for you, that is more than the entire annual economy of Japan. Just gone. It's an amount of money that's almost impossible to even wrap your head around.
Now, try to imagine that $5 trillion just vanishing. Poof, gone from the global markets. Not over the course of a year or month or even a day. The theory we're breaking down today claims this all happened in just 30 minutes. That's faster than your lunch break.
So, that's the $5 trillion question, isn't it? What on earth could possibly trigger a financial collapse that's so massive and so incredibly fast? Was it just some random chaotic fluke in the system? Or was it something engineered on purpose? That's the mystery we're unpacking. Okay, so to really understand the theory behind this crash, we first have to zoom out and look at the global situation at the time. Just before this all went down, the world's economy was, to put it lightly, sitting on a powder keg.
I mean, it was basically a perfect storm brewing. On one hand, you had the threat of a major military conflict with Iran, which everyone knew would send oil prices through the roof. At the exact same time, you had huge economic players like China and India dumping U.S. debt. And China, well, they were buying up physical gold like it was going out of style, which pushed the price to record highs as investors all over the world started losing faith in the U.S. dollar.
But here's where the story takes a really sharp turn. The central argument of this theory is that this wasn't some natural market correction. No. Instead, it was the first shot fired in a hidden financial war, a crash that was manufactured with a very, very specific goal in mind. And this brings us to this key idea they call the fake crash. The concept is actually pretty simple, but it's absolutely ruthless. Basically, powerful players intentionally trigger a market collapse. This creates mass panic, right? It causes all the regular, everyday investors to sell off their holdings to stop the bleeding. And guess who's waiting at the bottom to scoop everything up for pennies on the dollar? You got it, the same people who started the fire in the first place. So how would an attack like this actually work? Well, according to the theory, the playbook looks something like this. Step 1. The architects of the crash flood the market with enormous sell orders for gold. Step 2, the price completely tanks, which triggers all the automated selling programs and, of course, widespread human panic. Step 3, regular investors see their life savings evaporating and they rush to sell, which just pushes the price down even faster. And then, the final move, Step 4, once the price has totally cratered, the insiders just swoop back in and buy up all that gold for a massive discount.
So, this alleged crash, it was a move on a global chessboard. See, according to this theory, this wasn't just about a few powerful players making a quick buck. Not at all. It was a strategic play in a much, much bigger conflict between the world's two largest economic superpowers.
So what were the alleged goals here? Well, in one corner, you have the United States, supposedly trying everything to protect the US dollar's status as the world's go-to currency. Their alleged tactic? Engineer a spectacular gold crash to absolutely shatter everyone's confidence in gold as a safe alternative. And in the other corner, you have China, aiming to do the exact opposite, to dethrone the dollar. Their strategy? Buy up as much physical gold as possible to lay the foundation for a whole new gold-backed financial system.
Now, supporters of this theory often point to comments just like this one as a possible clue. When he was asked about the weakening dollar during all this instability, then President Trump was quoted as saying, "You have no idea what I'm about to do." Now, some people took that as a kind of veiled warning that a big, unconventional move to defend the dollar was already in the pipeline. Okay, so if this $5 trillion crash was just the opening shot, you have to wonder, what's the end game? What are the potential consequences if this quiet financial war suddenly breaks out into the open for everyone to see?
Well, the potential fallout would be massive. We're talking about a full-blown open currency war between superpowers. We're talking about extreme inflation, and oil prices maybe doubling to $200 a barrel. Global trade could grind to a halt. Even air travel could be severely disrupted. This wouldn't just be a temporary crisis. It would be the potential start of a great reset, a fundamental redesign of the entire global financial system as we know it.
When you look at it that way, the gold crash was never really about gold. It was about trust and power and control. It represents what could be the first major battle in a long war over the future of money itself.
And that really leaves all of us with a pretty provocative final thought. If traditional safe havens like gold can be manipulated and even weaponized, and the world's biggest currencies are locked in this high-stakes battle for dominance, it raises a really fundamental question for every single one of us. In a world of financial warfare, where is the real safe haven for your wealth?